Hello, it's Justin Woodall, your trusted Athens real estate advisor, and here we are at the end of 2016. So I'm going to kind of talk about what might be coming in 2017. Now, I can't make predictions, I can't see into the future. If I could, I would be real rich real fast, but that's never happened. So I'm going to just kind of talk about some things that I think might be happening in 2017. Do not take any of this to the bank. But we'll see what happens in 17, but I'm going to kind of give you my thoughts. One thing that I think everybody can agree on, and I'm reading reports from the big gurus, the economists, all the people that are supposed to be a lot smarter than me. One thing it seems everybody can agree on is that interest rates are going to continue to rise. I don't think they're going to jump. They're not going to make huge jumps, but they are going to continue to creep up throughout the year in 2017. So what does that mean? It means a couple things. If you're a buyer, it means you may be better off buying sooner rather than later. If you're able to buy sooner and get the benefit of a lower interest rate, your payment's going to be better for the life of that loan. And if it's a 30-year fixed rate loan, you're going to reap the benefits of that for 30 years if you stay in that house that long. So for a buyer, if rates are rising, and that oftentimes happens when we see rates rise, the buyers that are on the fence get off the fence and they take action. So if you're thinking about buying a house, it might be a good time to take action sooner rather than later. What does it mean for sellers? Oftentimes sellers, if they're locked into a really good rate in the home that they're currently in, then they may say, hey, we don't want to move because then we'll get a higher interest rate and a higher payment. So you may see some sellers start to settle in and decide that it's not time for them to move or not time to sell their house, which kind of brings us to another issue right now. Inventory levels are really low. There's not a lot of homes available, especially in the more average price range. Now, as you get into higher price ranges, we're still in a buyer's market, but in the lower and average price ranges, it's definitely a seller's market. Inventory is low, so if the sellers start to settle in because rates rise, then that's going to make that problem even worse, which means prices will continue to rise. We've seen prices rise this year and really over the last few years. So what's going to happen in 17? That's kind of unknown as well. It looks like they're going to keep going, especially if inventory stays low and if the demand is there. Now, if the demand starts to back off, if people decide, hey, we're not as interested in buying houses because rates are rising, it may slow down the price increases a little bit. But right now, they're continuing to rise. Part of me wonders, it feels a lot like it did in 06 and 07 when the market was going crazy and prices were rising and people were buying and selling and making a lot of money selling houses. Feels a lot like that. The difference this time, though, is back then, if you remember, we had those crazy loans. You could walk in, state your income, pull a credit score, and you didn't have to have any proof of any kind of income, any proof of assets or anything like that. That's not the case today. Lenders are asking for way more than they ever have. So you've got to show documentation, you've got to show your tax returns, you've got to show your bank statements. They need so much stuff today. So the lenders are really doing a better job qualifying buyers. So the buyers that are buying today are more qualified than the buyers that were buying, 10 years ago. So that's one difference. So that alone may be, some people say, well, we're going to go back into a recession because it's time, and maybe it will come, but I don't think it's going to be the same just because we don't have the bad loans out there now that we had then. But again, who knows what will happen. I do believe that inventory will stay low. Going into 2017, builders are starting to build a little bit, but they're not building nearly at the rate that they were building back in 06 and 07. I think the builders remember that, and they're going slow. They're being more conservative, so we're not seeing the glut of houses come out on the market that we saw back then as well. So inventory is still kind of low. Rents are rising or have been rising, so if that continues, we may also see first-time home buyers enter the market at a bigger pace because they may get tired of the landlord increasing the rent, tired of paying that, and say, you know what, it's time for me to own. So we may see some first-time home buyers. Another thing I've read, as the economy improves, as stocks are going up, the people are feeling wealthier, we may see more happening in the higher end price ranges, which has still been slow up to this point, but we may start to see homes in a higher price range sell in 2017. We're starting to see it a little bit here. So that may improve in 17. And another trend that we're definitely seeing that the economists also are writing about right now is that the trend seems to be especially for the more affluent buyers. They want to be close into town. They want to be walkable neighborhoods. So for Athens, it's the hospital area, the Five Points area, the Boulevard area. They want to be close in. They want to be walkable, and people are paying a premium for that. So that trend is expected to continue. So those are just some thoughts and ideas for 2017. And we'll see how the year plays out. We're looking forward to it. My team and I, as you know, we started opening our brokerage this year. We've had a great year, best year ever in 2016, and we're looking for a great year of serving you, our clients, since 2017. And again, as always, if we can help you, a friend, family member, or coworker, give us a call.